Hello ladies and gentlemen, how are you? Let me tell you this one thing. What the mind can conceive and believe, then it can achieve. If you do believe that, then welcome to Forex Clubhouse. And in today's video, you will learn how to master that skill of trading along with the trend while trading Volatility 75 index. So make sure you got that pen and a notebook ready. Ladies and gentlemen, as said earlier, the pair that we will be using to do our analysis today is VIX 75 index, or commonly known as Volatility 75 index. And as usual, the first thing that you must always do once you have opened up your charts is to know the direction of the market price. And these below are the three most important questions that you have to ask yourself each and every day, just the moment after you have opened up your charts. The first question that you should ask yourself is it trending to the downside or is it trending to the upside? And the second question is it just consolidating in between the prices and not going anywhere? Hence, ladies and gentlemen, after I have carefully asked myself the questions above and answered them faithfully, I find that the current trend that the market price is currently at is to the upside, hence an uptrend market. So can anyone guess in the comment section what is that we normally do on an uptrend market? Are we supposed to look for sell entries on an uptrend? Well, the answer to that question is definitely a no. What we should do is to wait patiently for the market to give us some profitable trading opportunities for us to enter our buy entries, and that's it. But some may argue that, why are you saying that the market is still on uptrend whilst for sure I can see the market is on start of a downtrend with this downside impulsive leg? And after you have come with me with that soulful question, I will just ask you this: what is your definition when it comes to know when a trend has ended? Because some people use trend lines and they say, if my trend line is broken, then the trend has changed. What is your definition? But let me tell you this secret, and make sure you write it down. According to my own definition, a trend I assume only to be broken once the previous higher low of an uptrend market is said to be broken, and vice versa is true for a downtrend market. That's it. Hence, since this impulsive leg to the downside did not break this uptrend's previous low, then it is only logical to just assume that the market is still on uptrend according to my definition. And therefore, it is only proper for you as a professional trader to always look for buy entries only, nothing else. Now, since the price has been struggling so much to break this higher low, what we should do now is to zoom in a little bit so as to see clearly any buy entry conferences that may present themselves to us. And guess what? The trading opportunity that we were expecting did not just present itself once, but twice. Just imagine, how lucky are we? And can you please guess what are those opportunities that I'm here talking about? Well, friend, you have just guessed right. This week rejections right here are enough of a conference for us bulls to enter into this market confidently with buy entries. Why is that so? One may ask, and it is very a good question. Why is that so? Well, it's just because this week rejections just simply mean that the sellers are no longer having that required strength to push this market price any further to the downside. hence making the failure of breaking the previous uptrend market to be clearly visible right through our eyes. And ladies and gentlemen, let me ask you this one more question. Since all of our conferences have been met, should we just enter right away into the trade? Well, to answer that question for you, the answer is a no. What you should do is to first define your exit plan. And this, it is so important, since you have to know and you have to understand that Forex trading is a game of probabilities, and you have to know the probable and the possibles. Hence, you have always to assume that, like, it is also possible that the market may break this low, then do a retest before continuing to the downside direction. And it may occur, who knows? The market is an imperfect thing. Therefore, it is only best to press the stop loss just below this zone. So, if I am to take this trade right now and have a logical stop loss right below the zone, then I will be risking way much higher than what I can afford to lose. Did you get that? If I am to take this trade right now and have the logical stop loss right below this zone, then I will be risking way much higher than what I can afford to lose per one trade. And that is my rule. I always risk just 8% of my trading capital per every trade that I take. And if I enter right away right now, I will be risking more than 8% than what I can afford to lose. Hence, here is what I will do, okay, is that I just go and press buy limit orders, so that once the price comes back lower to my entry, I'll be just automatically tagged in to the position. And that said to you, let me just press my buy limit orders like this. And ladies and gentlemen, let it be known to you that apart from offering a one-to-one mentorship each and every month, I also do offer signal services. If you'll be interested, then please feel free to contact me through my WhatsApp number that can be found in the description below. Hence, having said that, take this time to observe how this trade plays out. Ladies and gentlemen, thank you so much for watching this video. I truly hope that you have both enjoyed and learned a lot from this video. Now please take this time to hit that subscribe button and turn the notification bell icon on to be always the first to watch any new of my uploads. Thank you so much for watching, and bye bye.